Microsoft is up nearly 15% this year. Atlantic Equities says the run is far from over. Today, the firm upgrading the stock to an overweight, raising the price target to $125, a 25% upside from here. This is our call of the day. And you got to wonder when Microsoft becomes fully valued. Sarat.
Well, I think you're getting there, but actually what I like about the story is compared to a lot of its competitors, it has everything going for it. And in the sense of the cash flow, the balance sheet, the dividend, and they don't have really pieces of their business anymore that are kind of holding them back. A lot of their competitors do. So in this time of everybody else selling their tech, this is a good place to quote hide or even actually add to, because I think you're going to be fine for the next few quarters in a company like Microsoft.
I also think you're seeing significant enterprise IT spending, and I think Microsoft is a significant beneficiary of that, and I don't think that cycle is over. Again, I'm not looking to do something like sell Microsoft. I have the good fortune of being long Microsoft from the mid-'60s. So I would stay with this company. Maybe you want to hedge against it, whether you're using the options market or something like that. But the cycle continues. I think Sarat is right. I think the balance sheet is incredible, the tremendous amount of cash. And this is a company that has great leadership and has diversified. And I will also add, when we had the troubling news as privacy concerns with Facebook, Microsoft, there's something about this company that management makes the consumer feel secure that privacy is present. And I think that's incredibly important in this technological environment that we're in. And it's one of the reasons why, okay, if it pulls back a little, I'm willing to stay with it.
The analyst forecasts for Asia are very strong. Obviously, that's the big growth catalyst, right, that all the investors like. But they're saying that more than $100 billion in revenues over the next decade in what the analyst estimates to be a $450 billion market opportunity. So they're essentially saying that Microsoft will have about a quarter of the total addressable market in cloud. Is that something that you believe? It seems like it's still early stages.
It's still early stages. It's still very competitive. Where Microsoft has the advantage is that they've already got, like Apple and some of their things, that ecosystem there. So it's a mistake just to think, some people still do, Microsoft is just an operating system. It's not. It's AI, it's cloud, it's just across the spectrum, and they're going now technology driven and putting more money into R&D, effective R&D. So that's why I still like. So I think it's a good place to be. It's not going to be impervious to a drawdown like we're seeing today.
And your competitors really are Amazon and Google at the sense, and Microsoft knows how this game is played. Google's trying to get up there, but Amazon is by far the leader in this place. But I don't think, from our understanding, is Amazon doesn't have the ability to where Microsoft needs to get.
I like it, but in my tax-deferred account, I let it get called away, as I said. So to Joe's point, if you're in a taxable account, do you want to sell it to buy it back 7% cheaper if it corrects like that? No, of course not. But because it was tax-deferred status, I decided to let it get called out, Mel. But what I really like about their model is the reoccurring revenue, the monthly reoccurring revenue. Even though Google Sheets and everything that PowerPoint and Excel used to be for Microsoft is not a freebie because Google gives it away, these guys nonetheless have the enterprise stuff that gets that reoccurring revenue, just like Adobe does. So I think you don't throw this one out. I think you hold on to it, like I say, with that caveat about the tax-deferred status.
Going back to our discussion at the top of the hour, though, in terms of a day like today where we're seeing tech being used as an ATM, is this the kind of stock that you buy on this weakness, or is this the kind of stock you let go away, thinking that technology could have some trouble?
Listen, with again, longer-term portfolio objective, sure, I'd buy it here. But understanding, as I said before, this is a trading event. Stock's 98. It could easily fall to the low 90s, easily.
I think you can buy this or most of the leaders that we've seen. I like Netflix. I'm just saying that the valuation is a little higher for me. But to me, that's also just a solid company with a moat around the business.
Right.
So I think if you do your work. But this one in particular is, in famous last words, a relatively safe holding. So
I agree with Joe. I would nibble into this if you did not have a position, but I would not use this as a source of funds.
No. Okay.
I think this is much more arbitrary.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.